Hello and welcome to the Smart Market Insights show here on Kalkine TV. I'm James, it's great to have your company, and today we'll be shining a light on whether the 2022 commodity crisis is actually bigger than the oil crisis of the 1970s. The Russian invasion of Ukraine on the 24th of February has catapulted global commodity prices to record high levels. Both Russia and Ukraine are among the world's leading commodities producers, including crude oil, metals and food products such as wheat and corn. Escalated tensions between Russia and Ukraine have pushed commodity prices close to registering the fastest pace for over half a century over the past week. On top of this, Western sanctions on Russian financial institutions have led many traders to exit from doing business in the country. For many, escalating oil and commodity prices have created unfortunate flashbacks of the oil crisis in the 1970s. So, in this report, we'll find out if the 2022 commodity crisis is in fact bigger than the oil crisis of the 70s. The tussle between both nations has pushed Brent crude oil prices to as high as $139.13 a barrel as of last Tuesday, after the US decided to ban Russian oil imports, further deepening supply concerns. The recent spike in crude oil prices has drawn comparisons to the oil crisis of the 1970s, when crude oil prices increased fourfold after the Organisation of Arab Petroleum Exporting Countries put an embargo on their oil exports. Besides crude oil, the impact of the war has affected prices of other commodities such as nickel, aluminium and palladium, which all rose to new all-time high levels of late. Additionally, food products including wheat, corn, palm oil and other products have also jumped to multi-year highs in the past week. Nickel prices also surged by a whopping 65% on Tuesday after hitting more than $101,000 per tonne in the previous session on the same day. Analysts from leading investment firms, including Goldman Sachs, believe that the rally in the commodity market is just a preview and that there is still more to come. The broker has increased its Brent crude oil forecast to average at $135 per barrel through 2022, significantly up from its previous forecast. Furthermore, the stockbroker also predicts gold to hit $2,500 per ounce this year, blasting through earlier highs of $2,072.50 an ounce, which was achieved in August 2020 amid the first wave of the COVID-19 pandemic. And now, before we take a look at Russia's role in the commodity market, it's time for a very short break on the Smart Market Insights show. Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV. Thanks for joining us on Kalkine TV. You're watching the Smart Market Insights show, and we're taking a deep dive into the impact of the Russia-Ukraine war on the commodity markets. As a leading player in the commodities market, Russia accounts for nearly 1/3 of the world's total palladium and 1/10 of the platinum production. The country also fulfills around 5% of the global nickel demand and is one of the leading suppliers of thermal coal. Its steel exports also account for about 6.5% of the world's total seaborne steel exports, and ongoing Russia-Ukraine tensions are anticipated to flare up commodity prices, which are already facing the heat due to supply disruptions since the beginning of the COVID-19 pandemic. Rising oil prices are one of the major deciding factors for consumers to start switching to electric vehicles. However, the adoption of EVs also requires a proper infrastructure, such as the availability of charging stations. The upfront cost of owning and running an EV also matters to a buyer, therefore assuming that consumers would shift towards the EV space solely based on higher oil prices seems to be somewhat of a far-fetched notion. The global commodity market has witnessed a staggering price surge in the past week due to rising concerns related to supply shortages amidst escalating tensions between Russia and Ukraine. As Russia-Ukraine tensions continue for a prolonged period, there remains significant ambiguity in the market regarding stabilising spiralling commodity prices. And of course, we will be keeping a very close eye on the situation here at Kalkine TV, so make sure to keep it locked and subscribe to the channel. That is all for this edition though of the Smart Market Insight Show. Another edition coming your way tomorrow, but for now, keep it locked here on Kalkine TV for the latest market updates and business news. I'm James, signing off for now.